Have you ever felt that it's difficult to sift through the constant stream of information and understand what's happening in the global markets? Well, if you are, you're not alone. My name is Omar, and I'm here with another monthly market update. If you're new to this channel, or you've been watching our videos for some time, welcome. However way you ended up here, you're going to want to stick around as I break down the latest financial news and key events that drove the markets. February saw another wave of optimism for investors, building on a strong start to the year. Despite initial concerns about the US CPI, and CPI is a measure of inflation, whether it's year over year or month over month, equities rebounded, signaling strong resilience in the equities market. AI chipmaker NVIDIA, the bellwether for the tech sector and the broader S&P 500, announced stellar results in Q4 of 2023. This had a ripple effect and fueled optimism across the global markets. We're also seeing the resiliency of the US to the rate hikes, as they added 353,000 jobs in January. In addition, there's been an increase in average hourly. However, this has raised some concerns because average hourly earnings are a key driver in pushing up inflation. In an effort to revitalize its real estate market, China's central bank has lowered the loan prime rate from 4.2 to 3.9%. The cut is expected to lower mortgage costs across various cities and revitalize the real estate market in China. It's also an important and crucial step in its economic strategy. Now, I want to talk a little bit about the International Monetary Fund, or the IMF for short. For a little bit of background, the IMF is an international financial organization that's funded by member states of the United Nations. The IMF released its growth projections for 2024 and 2025, providing some insight into what they think is going to happen in the world economy. They predict that there's going to be an increase in global economic output of 3.2%, which is slightly more than last year. More importantly for Canadians, the IMF is quite optimistic about Canada's growth prospects. They believe that the Canadian GDP will grow quite rapidly, ranking third amongst advanced economies. For reference, they're aiming for a 1.4% growth in GDP for 2024 and 2.4% for 2025. Now we're going to jump back into some inflation numbers, as I know inflation is still on everyone's mind. So the slight dip in US CPI has offered a little bit of relief, but shelter costs have been driving up inflation. Shelter costs play a pivotal role in inflation and has been influencing the central bank's decision not to lower rates. In Canada, CPI dipped from 3.4 to 2.9%, but the main contributor to that falling CPI has been gasoline prices. Central banks around the world have been playing at a delicate balance between trying to control inflation and at the same time not grinding the economy down to a halt. Understanding inflation trends can help guide your investment strategies in both the long and short term. Overall, global equities markets have been reaching new heights. They've been led by both the Japanese and the US equities markets. US firms who have been posting quite strong earnings are reflective of a strong US economy. However, the rising valuations across the stock market has been causing a little bit of concern for investors. Those rising valuations can lead to some short-term volatility. Meanwhile, Chinese equities have started to rebound, pushed by the regulatory changes enacted by the Chinese government. That wraps up today's video, but I'm curious about your thoughts on the latest market updates. Share your insights and thoughts in the comments below. If you'd like to get more information, visit the link in the description, and we also post regular finance articles and market updates, so make sure to check those out. If you enjoyed today's video, make sure to subscribe and leave a thumbs up. Thank you for watching.